The pattern continues. I believe we're around 8 or 9 trading days now where we have alternated up days, down days, up days, down days as the candles go back and forth, making for short-term predictions to be a pretty tricky little exercise. Well, let's see what we have coming into today. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:14 a.m. Central Time, and I'm recording this in preparation for the market day of March the 24th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So, just what did happen in the overnight? Well, basically scratched just slightly up at the time of this cut. It really, there's nothing terribly remarkable here. Perhaps you could point to crude oil. Crude oil is up 0.76, and you remember it was down pretty heavy yesterday, if I recall correctly. Euro's up about 0.3. Bonds up barely, just 0.13. And then gold up about a little less than 0.5%. So crude oil and gold probably the most significant overnight movers. I suppose it's also worth noting that everything was generally bullish. So nothing really to surprise anybody getting up and getting ready for the trading day at this point. In terms of overseas action, that was also pretty tame. China up just a fraction. Hong Kong down about 0.4, Japan down about 0.2, Europe also up just a fraction in both Germany and the United Kingdom. So nothing really in the overnight action in either domestic or foreign markets to get excited about. In terms of our macroeconomic reports, we have CPI today, and we have flash manufacturing PMI. So there's a couple reports that are going to come out before the opening and then one after the opening. Richmond Manufacturing Index and new home sales also coming out after the open. So kind of be aware of that. You do have some during the trading day macroeconomic reports to get danced around. In terms of tomorrow, we have core durable goods and crude oil inventories, the usual Wednesday crude oil inventory report. So nothing terribly exciting on either side there. In terms of our current volatility, short-term VIX getting very low, 12.03. You see the historical implied IV percentiles also quite low. The Dow did tick up just a little bit yesterday. But in general, we're basically down in the lower quartile, and the Russell just at year-long low levels. It actually went up a point with yesterday's action, but these are very, very low levels. Again, we caution that low volatility can persist for quite an amazing amount of time. If you recall, last summer we went weeks where the VIX was down around a 10. So just because we are extreme doesn't mean that you're going to have an immediate timing trigger to have increased volatility. But you should be biased towards increased volatility and continue to be ready for that. And you see this pattern. Not only have we had these alternating up, down, up, down, up, down, but we've also had these kind of alternating pattern in a standard deviation move. So kind of be aware of that as well. I mean, if we're going to follow the pattern, we could very easily have a standard deviation move today. And I guess it would be predicted to be to the upside in that yesterday was slightly down. So not much of a pattern to bet trading premises on, but certainly that has been the pattern of late, and we'll certainly watch to see how that continues. In terms of our regular daily report, we do have upcoming gold futures rollover approaching. And then in terms of our market trends, our intermediate term phase opinion remains phase 3, looking for higher highs, higher lows, still looking for that next higher high. We are very close, within about 1% on the S&P of establishing a higher high, and we would love to see that higher high put in and confirmed to be able to give us a stronger intermediate term phase opinion setup. Portfolio posture, very strong. IBD status is now confirmed uptrend. GMI index also is 6 out of 6. Active trader market posture remains bullish. Our position sizing opinions, both from an investor standpoint, from a volatility active trader standpoint, both at up to 100%. Market timing, we do have a one-day outlook slightly bullish. 3-day outlook also slightly bullish, and the longer 2-week outlook also remains slightly bullish. Market postures on all 4 indexes are bullish, with the NASDAQ and the Russell both being in a very bullish kind of stance. And really the S&P, if it does have a standard deviation up move today, could very easily go into a very bullish stance as well. But bottom line is everything is given a signal as okay to initiate new short-term and intermediate-term bullish trades. We do remain with a threshold level 0+, which is our normal with elevated factors, hedge warning status. And as you see here, we still have a number of warning flags that have not ebbed quite yet to be able to say that there's more than maybe is typical for a threshold level 0 status to be able to play in. From a volatility standpoint, we still have a high distribution day count. Both the S&P and NASDAQ are sitting at 5. We did have a volatility ratio warning, and that comes from this very, very low volatility spike that came in at the end of last week. And from a trend, we still have to establish that higher high in the S&P. We have in our most recent swing a lower low, so that is something of a warning. Let's see here. In terms of intermarket risk aversion indicators, we still have a number of them that are flagging risk off. So there is a number of things here that causes us to still have a plus at the end of that hedge warning level. Opinions for option income strategies, covered calls, and put selling all remain the same. VIX is inside the acceptable window, so everything is a go for the typical option income strategies approaches. Covered calls, we're still calling for an equal distribution for between in the money and out of the money strikes in this environment, and put selling remain a pretty good environment for selling puts against a core portfolio basket of stocks that you're willing to own in the position size that you're willing to own. So no changes there. And let's drop down to our sector specific information for today. Quite a bit of green here. We do have noted weakness in transportation, and as the Dow theory goes, if transportation is doing poor, it's kind of tough for the broad market. You have also energy still consistently weaker, industrials weaker, materials are weaker. Our typical stronger would be the consumer areas. The retail have also been also doing quite well. Healthcare, of course, probably the hottest. And in fact, if you look, let's drop down to the industry group. If you look down at the industry group, some of the hottest industry sectors, and I've got another cut of industry groups that actually, splits up, for example, healthcare not into just biotech, but also into equipment, healthcare equipment, pharmaceuticals, etc. And frankly, I want to say it was like 4 of the top 5 industry groups in that particular ranking had some sort of healthcare sector association. So healthcare is absolutely very, very strong and consistent, though yesterday it was slightly down, mostly driven down by the IBB components, those biotech components, and you can use the symbol BTK or IBB, either one, for the biotech. But the biotech, certainly there were a number of important companies that were driving that down yesterday. I wouldn't expect that to last very long. It's probably a value proposition in being able to get in at some point into that particular industry group. From a percent change, you see that we did have consumer staples and telecom utilities probably the stronger of the day. Though nothing was terribly strong yesterday. On the flip side, can't say that anything was terribly weak, with the exception of perhaps industrials and financials, perhaps more so. So that should wrap us up for today. As always, greatly appreciate your liking us on YouTube and following us on the various social media platforms. Support, as always, can be had at the support@falconglobaltraders.com email site, and additional information on the website with the same name, including information about our day trading products, the daily price guides for such markets as the 4 E-mini contracts, jumbo stocks like Apple, Google, Netflix, and Amazon. Great product there for those day traders. Disclaimers as always. Just hit the pause button if you need more time to review this. And as always, greatly appreciate you each and every day in the Falcon Global Trading community. We'll look forward to seeing you here at the same place tomorrow.